Happy Monday! It's Hema here, and I have got a skinny dip for you, an update on the SPY ETF. Today's Monday, April 6, 2020. Before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, since my last tribe update, where I gave you that fun puzzle to go through as a helpful Hema, I was feeling a bit under the weather, fatigued, and a couple other weird things. And I stayed home, I rested, and I'm doing much better. So wanted to bring your attention to the SPY. I have been keeping an eye on it even throughout not feeling so hot because I still come in and look at the ES and NQ every single day, the futures, in the full skinny lifetime. So I'm very attuned to all S&P 500 related markets. And what I noticed was that the market timing that I had put out in my Q1 Skinny Markets Outlook did provide a little bit of an early heads up for both market turns that we had. So here's the weekly chart, and the week ending February 7th is what I had for key timing. And you can see that was just 2 weeks ahead of the major high we had. After that, the next key timing I had was for March 18th. So that's the week ending March 20th, and that was just 1 week before the current low came in. Now, I say the current low because we don't know if it's the low, if this is all that we're going to see of a bear market and we're going to take off to new levels because of stimulus or perhaps COVID threat dissipating. I don't think that's happening anytime soon, so I think that the current bounce is a low, but not necessarily the low. When you look at the weekly chart and you look at the RSI power zones, you can see we fell all the way down into that bear support power zone or a lifting up, but I don't see any indication here yet of a major reversal to the upside. Some short-term upside, maybe for a couple days or even weeks, but not necessarily the low. So how do we use this to get more focused on the direction and important levels in the market ahead, as well as the key timing? Let's take a look at the daily chart where I'll walk you through that. So here's a daily chart of the SPY. So these two blue vertical lines mark both of those dates that I had in the last Skinny Markets Outlook. So if you got your hands on that report, then you were ready for this tapering off of price action. And in fact, it was during the February 19th monthly group coaching call that I said, if you are not long, please stop buying. Something is funky in these markets, and I would watch out. A couple days later, it tanked, and you know the rest. Now, my other key timing point, which was longer term compared to the early February report, was for March 18th. And that only provided a short-term one-day low, but it was really a clue that the downside momentum was waning or lessening. And you can see that evidenced not only in the price action that formed a low on March 23rd, but the way the RSI power zones were acting. So those of you with the bull bear RSI face-off, you know what this is all about. And hopefully we're using it to help you be ready for the latest market bounce. Now, for the past few days in the SPY, as well as in the ES, or really more like the past several days, we have been in a sideways range. Okay, so we are seeing momentum attempt to reaccumulate and push the shares of the SPY or the futures contracts for the ES and NQ higher. And just now, starting this week, is starting to get a little bit more ramped up. So what are the possibilities ahead? Well, I think it's likely that we attempt a retest of the March 31st high. And if we can get above 266.05, then I think there's a good path to 285.84. Now, those levels and how I derive them are from various methods I applied to get support and resistance, and I'll go over those in full detail during this week's monthly group coaching live, which will be on Wednesday. Now, in terms of these purple vertical lines, what are those? Well, those are my next key timing points. In the short term, and this really depends upon getting above 266.05, the next key timing point is April 9th. So that's later this week, and that is for the expectation of a market high or a pause in an upward movement before further movement higher. Bigger picture. And so it's further out, and so it needs to be revisited as we get closer. But bigger picture, the next key timing point is May 22nd. So by May 22nd, we may see a significant basing in this market or a platform forming. Again, we need to look at the short-term price action and how the short-term cycles play out before counting on long-term cycle to do what I think it will do in terms of forming a potential major low. It's too early to say, right? So I monitor all the short-term day-to-day movements in the full skinny. I use my RSI power zones and my forecasting methods to come in and lay out the game plan on top of that. So I look forward to seeing members in monthly group coaching live this Wednesday, and I'll catch you all on the inside. You can sign up at hemaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.